guys, thank you for joining me once again. So a lot of people do not understand what Forex is and what it is that you do when you're trading, and that is what I really hope I'll be able to clarify today. The topics that I'll be covering are: what is Forex, the trading sessions we have, types of traders, and the 3 types of trading analysis. Now before I forget, please do not forget to hit that subscribe button and the notification icon so that you'll be notified whenever I post a new video. What is Forex, you might ask? Well, firstly, Forex trading is not a scam. It will never be a scam. People might scam you and use Forex, but Forex on its own is not a scam. The foreign exchange, or Forex in short, is simply the buying and selling of currencies, and it's one of the fastest growing markets in the whole world. Over, I think, about $5 trillion is exchanged in just Forex only. So you can imagine how massive that market is, where so much money changes hands in just a single day. So basically in Forex, you would simply buy one currency if you believe that in value it could be stronger than the other one in a couple of days or a couple of hours or a couple of months. And if you believe that a certain currency will be weaker or it will decrease in value in a couple of days, hours, months, then you would sell that currency. So we use currency codes to indicate currencies that are involved in a trade. For example, if you're looking at the USD ZAR or USD ZAR, which is what we are usually looking at in South Africa because it affects us a lot. So as you can see there, we have the USD, which is for the United States dollar, and ZAR for the South African rand. Now let's go into a practical example where you get to understand what exactly is happening when you're trading. So let's say, for example, today $1 costs 14 rands. So you would need 14 rands to be able to buy just $1. And according to your analysis, you believe that $1 will cost about 17 rands in few months. That could also be in a couple of days or a couple of weeks. Forex can change in a very short space of time. So if you have this analysis, then you believe that the dollar will appreciate in value. So what would be the action that you take in this case? It's quite simple. You buy dollars today, so when they actually cost you fewer rands today as compared to in a few months coming. So an actual trade that you can look at is the one that I have here, where today you use 14,000 rands to buy $1,000. So you have 14,000 rands in your bank account, and you say, okay, you know what? Let me just buy $1,000. And in 2 months, let's say your trade is actually as accurate as you had analyzed. So you go with your $1,000 and you now have to exchange them back into rands, which makes you a nice amount of 17,000 rands. You can see that initially you invested 14,000 rands and now you're getting back a nice 17,000 rands. That's an instant profit of about 3,000 rands. Obviously there may be certain charges that could be involved, but if we exclude all charges in this case, you can imagine how much you have just made. If you had invested 140,000, you would have got a nice 30,000 rands profits. 1.4 million, you get a nice 300,000 rands in profit. Now I'll let you play around that, and you can imagine how much money you can make if you are actually doing this on a daily basis and for a long enough period of time. So why would you want to trade Forex? And this is one of the most interesting features about Forex. Firstly, Forex is a 24-hour market Monday to Friday. Weekends, it's closed. you get to relax and spend the money that you made during that week. So unlike working 9 to 5 or 6 to 6 or whatever hours that you have to work in Forex, you basically decide how long you want to trade, and it can work around your schedule. You can always find a way to feature it in during your day, and that's also one of the great features. It gives you maximum flexibility. There are people who work full-time, as we know, so they'll be able to maybe place trades before they go to work or during their lunch or after work. You can just make a plan around your time. Another thing is that trading online, or even if you're using an app or your computer software, it's the same thing. The transactions are very instant. By just a click of a button, your trade has been executed and you are either making profit in a couple of minutes or you're probably making a loss. But yeah, if your analysis is good, then it's going to take just a few minutes to a few hours for you to start seeing whether you're making profits or not. Now, there are other markets out there, such as the Johannesburg Stock Exchange, where you'll be dealing mostly with shares. Now, when you go there, all trades are not instant, isn't like at the click of the button. So there could be delays, and if you miss something by just a couple of minutes or a couple of hours, then you will have a problem. And if you want to cash in as well, there may be delays that actually cause a huge problem for you. And then the most important one is the rate at which you make money. It's quite amazing actually, and as we go through with the other sessions, you'll be able to see how fast can you make money as opposed to other markets, I guess. Let's move on. So who can trade Forex? Just to summarize everything that's here, I will say anyone can trade Forex. Whether you're busy or you have time or you are uneducated or whatever, but anyone can trade Forex. It doesn't need a lot of high level skills. It doesn't need a lot of time. You can always make it fit around your schedule. Okay? So this important part of our lesson today is the trading sessions that we have. So we have 4 major trading sessions, which is the Sydney, Tokyo, London, and New York trading sessions. So basically, these are the biggest trading regions with major banks, forex brokers, and other financial centers. Basically, when they open their doors and start trading, you will see the action in the market. It becomes volatile in some cases, and when they actually close as well, you will see that in some cases there might be a reduction in the trading activity. So they bring in a lot of impact, and it's very important to note these different trading sessions, the times when they overlap, and what to expect when these sessions open and close. Okay, so we have the times for these trading sessions. The Sydney Open is at 10, or it opens on Sunday at 10, and we close the week on Friday with the New York close at 10 as well. So Sunday you can expect the market to be open at 10, and Friday at 10 you can expect the market to be closing, and you get to rest for the weekend. Then you can see where the other sessions are overlapping, and so on and so on. And as you go on, I'll try to highlight certain key features that you need to identify about these different trading sessions that will be very crucial to your trading journey. Now, one of the most important things to note and remember as well is that not every trading day is a good trading day. So you need to know which days you can expect to make the best money and which days you can expect possibly losses or having a very slow day. So the best trading days are Tuesday, Wednesday, and Thursday, and the bad days are Monday and Friday. So on Monday, you can expect very small movements. The people are very tired from the weekend. We all know the so-called Blue Monday. So people are very tired and they are not really acting on the market. And some of them are actually trying to figure out what the week has for them. So rather than taking a move and taking positions, they just wait to see what the market wants to do for the coming week before they take any action. On Friday at noon, we all know that almost everyone wants to go home. So you can expect that there's going to be a huge change in the market where people leave, and a lot of people leave early at work. So on Friday, so just make sure that as much as you might be seeing a lot of volatility early in the morning of Friday, but 12-1, try to minimize all your potential losses as much as you can, because the market could reverse, or yeah, you can just expect anything that could go against you on Friday. Now, you might be wondering what type of trader are you, because we all know that we do not like the same things. We cannot take the same risk. So it's very important for you to understand the type of trading you are, as it will also affect the types of trades you can take, the duration of your trades, and ultimately how much money you will be able to make per trade. But either way, it doesn't matter, because you will make profits. Just stick to what you are and not try to be someone else you're not. So we have a scalper. Basically, those are people who take a lot of trades in a day. They take short trades, fast trades, and you can say they are able to hold a lot of pressure than the other traders here. And then we have a day trader, which is also another short-term trading style, where you take a couple of trades in a day, maybe hold them for a couple of hours, but you definitely close them at the end of the day. So you do not like holding your trades overnight, because you know what, you might be sleeping and something else happens. And the next one we have is a swing trader, which is a medium to short-term trading style that requires a lot of patience, where you might be taking trades that you will hold for a few days to up to 3 months or so. So this is for those who are probably too busy to be checking on their computer every now and then, and the people who are very patient and who have a very nice account, a very nice trading account. So it really does work for you if you do not have time to check the market every day. Then we have the longest term trading, which is the position trader, which can hold trades that are from anything from 4 months to a couple of years. There are people who are this patient, and actually they have accounts that can support this type of trading. So those are the people who really understand their fundamentals. They look at the bigger picture. They are patient. Probably if you are busy with a company or something else and you just cannot have time to look at your investments every now and then, so this might work for you, where you just buy now, look at it after a couple of years. And the reality is, if you understand the market well enough, then you'll be able to predict where in a couple of years a certain currency might be at, and you actually do not mind holding for that long. And it can really work well if you're this type of trader. However, make sure that you have a good enough account. So we have different trading analysis that are used when you're trying to figure out what the market holds, which direction to take, and how you might actually make money out of the market. So the first one is the sentiment analysis, which is basically the process of identifying the positioning of traders, whether they are net long or net short, to influence their own trading. So basically here you are trying to understand how traders feel about a currency pair. What is their understanding of what is going to be happening with this currency pair, because a certain say fundamentals could be pointing to another direction, but it's very important to understand what the market players are actually doing, because one signal might say buy, but the market participants are selling, and they are the ones that drive the market. So you really need to understand what it is that they are doing. The second one is fundamental analysis, basically, which is looking at the forex market by analyzing the economic, social, and political forces that may affect currency pairs. We all know that things like inflation, unemployment, they really can harm the currency of a country. We all know that. And then the last one, which is my favorite, is the technical analysis. Basically, it's a framework in which traders study historical price movement to predict future price movement. You go back to your trading charts, you look at how prices performed before, and try to identify potential setups that could build up in the near future and profit from them. And one thing that really works for technical analysis is that a lot of traders actually use this analysis in their trading plan, and it will definitely force the market as well to move, because if a lot of people are looking at a specific analysis, they're using the same tool to trade, they are highly likely to get the same signal and therefore take the same direction. So I really love using technical analysis, and that's what I'm going to be spending most of my time on during our time together here. Thank you so much for tuning in. I really hope you did indeed get what you were looking for on this video. See you again on the next video. Thank you.